Hi everyone, Phil Rogers and Lauren all here from Low Market Edge. So you found the property. Your broker, aka us, has helped you find the right loan with a competitive interest rate and all the features that you want. You've completed the application and you're now waiting for settlement. As the day comes, you look through the paperwork and notice that the competitive fixed interest rate that you had applied for has jumped without notice. Your monthly repayments are suddenly set to be higher than you've anticipated and you're locked into the loan for your fixed period.
It isn't a scenario anyone would want to be in.
And it doesn't happen with us.
Many people may not be aware that it actually can happen. Interest rates change regularly in response to market conditions. And in the fine print of your loan application, it specifies that the interest rate can range between application and settlement date. But there is a way to safeguard against this, and it's called a rate lock.
So what is a rate lock? A rate lock is an optional feature that may be available to you with your application on a fixed rate home loan. It enables you to secure the rate, meaning that even if interest rates rise, yours won't. The lender usually charges a fee for this feature, but speak to us because this fee does vary and some lenders may offer it for free.
The amount of time the rate lock lasts will also vary between lenders. Some, for example, are 60 days, some are up to 90 days. So if you have a longer settlement, we can discuss which lenders might be right for you in your situation.
So how much are rate lock fees? The rate lock fee will vary depending on the lender, but tends to range between free and up to about 0.2% of the loan amount. So for a $400,000 loan, this amount could be around $800. The average is lower than this and tends to be around $750 for a $500,000 loan.
So when should you consider a rate lock? Rate locks tend to be most appealing when fixed interest rates are predicted to increase. For example, if some banks have started increasing their interest rates and others are predicted to follow suit. It also is usually more beneficial for a longer fixed term as there is more the borrower stands to save over the life of the loan. We can run through the calculations with you to determine how much the interest rate increase would affect you to warrant paying the upfront rate lock fee.
It's important to keep in mind that if a lender lowers its interest rate and you have opted in for a rate lock, you are not necessarily guaranteed the lower rate. Each lender has a different policy around this and you may need to negotiate to see if you can cancel the rate lock to access the lower interest rate, which obviously we can do on your behalf.
Also, this fee may be non-refundable, even if your loan application is unsuccessful. So speak with us to put your best foot forward with your application and understand where you stand with the lenders.
If you're considering whether to opt in or out for rate lock, speak to us to make sure that you understand the pros and cons and we can calculate your potential savings or costs. So as always, reach out, we'd love to chat. Bye for now.